Welcome back. Now let's look at the global stock market, right? And looking at this data here, the world stock market, right, has a size of $79 trillion in the year 2019, right? Of this $79 trillion, the largest market is the New York Stock Exchange, right? And it is about $25 trillion. And although we often speak about the New York Stock Exchange and the NASDAQ, the numbers would tell you that the NASDAQ is actually a lot smaller than the New York Stock Exchange, right? It's only $11.2 trillion, okay, right? So what we see is that both the American market, the New York Stock Exchange and the NASDAQ, they with a total size of $36 trillion, there's about half the valuation for the entire world stock market. Right? So these two exchanges, they dwarf the other exchanges where you see the Euronext, right, is only $3.7 trillion, and the HKEX is only $4.2 trillion. I find this chart very useful because when we talk about New York Stock Exchange, NASDAQ, S&P 500, Dow Jones, and all this chart helps to clarify what we are talking about visually. Right? So as you can see here, the S&P 500, right, we have a large part of this 500 stock listed on the New York Stock Exchange, and about a third or a quarter that's listed on the NASDAQ. Okay, right? And for the Dow Jones, right, Dow Jones, you also see a very similar structure, right, where we have listing on both sides of the New York Stock Exchange as well as the NASDAQ. It's important to understand that the requirement for listing is different between the New York Stock Exchange and NASDAQ. And typically, not always, typically the US listed IPO average value, market value at offering at the NASDAQ is a lot smaller than the New York Stock Exchange. And the capital requirement, the capital obligation, is also a lot larger in the New York Stock Exchange, right? It is $75 million as of this particular day that we look at the regulation. And for NASDAQ, it's only $1 million. Okay. Right. When we look at the global stock market valuation, just now I made the comment that the New York Stock Exchange and NASDAQ is about half of the total market capitalization. And as you can see from this very nice tableau chart, US is about 46%, followed by China 10%, and Euro area 7%, Japan 6%. Okay, right? However, if you're going to invest in the market, a global market, likely you're not going to invest like this. Likely you would invest through a mutual fund or ETF, and the mutual fund or ETF manager would follow the guidance from the MSCI World Index. Right? And when you look at the MSCI World Index, you will see that 65% of the index is allocated to US listed companies. Right? And Japan accounts for a much smaller slice, right? And if you try to look for China here, right, you will see that China would be part of other, okay, right, others, right? Even though it is 10% of capitalization. So in other words, the MSCI index does not fully capture the actual valuation in the market, right? But for all intent and purposes, portfolio managers would be guided by the distribution in the MSCI index, right? Over time, if this remain the same, over time, the MSCI would change their distribution to reflect closer to the actual capitalization distribution in the market. So this concludes this section.